Welcome to Dealer Driven, where the rubber meets the road to success. This episode sponsored by AuctionNet. AuctionNet is the industry's ultimate source for wholesale used vehicle data, powered by 265 and AAA member auctions, with more weekly transactions than anyone else. Integrated with top platforms like vAuto, AutoNeek, and Laser Appraiser, AuctionNet delivers fresh, comprehensive pricing data so dealers can buy and sell with confidence. From remarketing and pricing trends to portfolio performance and ROI insights, smarter strategies start with AuctionNet, your competitive edge in used vehicle wholesale intelligence.
Welcome to Dealer Driven. I'm Michael Hayes.
And I'm Cameron Wilson. Today we're spotlighting one of the most anticipated updates in the auto world, NADA's latest quarterly economic update.
We're taking a close look at how the U.S. light vehicle market fared in Q3 and what could be on the horizon for Q4. From sales trends and inventory changes to economic pressures and beyond, we'll cover it all.
Joining us are two highly respected voices in the industry. First, we're excited to welcome back Patrick Manzi, Chief Economist at NADA, who will help us make sense of the numbers every quarter. And alongside him is a longtime industry pro, Larry Dixon, who will bring his deep expertise in the wholesale market and auction trends.
Let's get started.
Patrick and Larry, welcome to the show.
Thanks so much for having us.
Likewise, thanks for having me.
Before we dive into the numbers, can you give our listeners a quick reminder of the key economic forces that were at play going into Q3 of this year?
Sure. So the big story of Q3, expiration of the EV tax credits. That happened on September 30th. What we saw in Q3 was a lot of pull-ahead demand in the EV space. Those credits, they offered really, really big incentives, $7,500 from the federal government if you did a lease. And then a lot of these cars were also heavily discounted by the manufacturers. So there were some screaming deals to be had, and consumers rushed out there to get them. What we saw in September was almost 12% market share for battery electric vehicles, and that had been running 7 to 8%. So it was a really big jump in that final month of the quarter. So now we're all kind of waiting to see what's going to be the new battery electric vehicle market share in a world post-EV tax credits. Certainly that was the biggest story of Q3.
What about on the wholesale side, Larry? Going into Q3, what kinds of things did we see as far as the forces that were at play leading to the numbers?
Yeah, you certainly saw some of the effect from the tariffs that were implemented by the current administration in terms of pre-buying or pull ahead of demand. There are a lot of consumers who were unsure of what would happen with new vehicle prices earlier in the year and perhaps over the summer months as well. So that additional activity that we saw on the new side of the market manifested itself on the wholesale side and the used side of the market in terms of additional inventory that kind of found its way to auction from those trade-ins that were the result of those new vehicle sales. In addition, interest rates, of course, have very, very important bearing for your more price-sensitive used vehicle consumer. Unfortunately, rates haven't moved a whole heck of a lot in terms of both new and used vehicle interest rates, despite the fact that the Fed actually reduced rates a little bit here back in September. So we hope to see some improvement in rates as time passes to help with used vehicle affordability and to help unleash some pent-up demand from your near-prime and subprime used vehicle buyers.
Oh, unleash, we like that.
So, Patrick, I know you touched on the EV tax credits going away. What else did you take away from Q3 market performance? What were some of the standout trends that you saw last quarter?
We are starting to see the rollout now of 2026 MSRPs for new vehicles, and we're seeing price increases kind of ranging 5 to 6% on a lot of these vehicles, and that is higher than it typically would be. What we've heard from the OEM is that they've been eating a lot of this tariff cost. It's shown up in their quarterly reports. Several $billion hits for some of these OEMs as they've dealt with tariffs. And there's only so long that they can absorb this. So we are expecting to see more OEMs pass along some of those tariff costs. Maybe you're not a buyer that 5 or 6% might cause you to come to the dealership and make that purchase. But certainly there are people out there who wanted to get in while incentives were still running pretty hot and before the big price jumps we're expecting in Q4 and into the start of 2026.
So thinking about this now, and this is really important to our profitability, as we know, how about inventory levels, both new and used?
We saw pretty stable inventory in the 2.6 million or so unit range. We are expecting largely that inventory is going to fall to about 2.5 million by the end of the year. After years and years of seeing inventory grow each month coming out of the chip shortage, we're now in a world where inventory is down year over year. Part of that is we had a lot of sales activity, and another part of it is production cuts by OEMs just based on production outlooks that the OEMs think that there is going to be a bit of a fall off in sales volume in Q4. And so they're trying to right size that for the end of the year so they don't have to lean too heavily on incentives to move the metal at the end of the year. Larry, what are you seeing on the used side?
Yeah, so used vehicle demand has been incredibly strong, and that's due in part to what we're seeing, as you would imagine, on the new side of the market, particularly as it relates to new vehicle affordability. It's no secret that new vehicle prices have grown significantly over the past several years. They've increased even more this year, and as Patrick was saying, expectations are that for the 2026 model year, we're going to see prices go even higher, not only through MSRP increases, but also through a reduction in new vehicle incentives, right? That's another way that OEMs can help counter the effect of tariffs. So that all supports used vehicle demand. Total used vehicle inventory is pretty light at this stage of the year. It was a little bit better in terms of a day supply earlier in the year, but we always knew that 2025 was going to be a challenge, particularly as it relates to late model inventory. And it's easy for us to predict that because all we need to do is go back to look at what happened about 3 years ago in 2022, particularly as it relates to new vehicle leases that were written and just new vehicle sales overall. New vehicle sales in 2022 were about 13.8 million. That was a substantial decline from the roughly 14 plus million new vehicle sales that occurred in the prior year. So both new sales in terms of loans and leases fell off dramatically in 2022, due in large part to the semiconductor and production challenges that the industry faced, as Patrick mentioned earlier. So really, we've seen a substantial decline in late model supply in the used vehicle market and also at auction. So 3-year-old volume at auction is down substantially year over year, as is 4 and 5-year-old vehicle supply at auction. Conversely, we've seen a significant jump in the inventory or sales of vehicles that are up to 2 years old. And that's primarily related to what rental vehicle or rental car companies have done. They're trying to right size their fleet levels to match demand. And we've also seen a lot of repossession volume come back to the market and roll through auctions this year. And you can kind of see that, or what the drivers for that are, when you look at defaults, delinquencies, and ultimately defaults for used vehicles, which are back to roughly to 2010 and 2011 levels, which, as everyone will recall, is when we were kind of coming out of the Great Recession and the financial crisis that we experienced up through 2009, or the mid part of 2009.
If I may, real quickly, too, I just want to highlight something, Patrick, and correct me if I'm wrong. I'm pretty certain pre-COVID, the average new vehicle inventory was about 3.5 million, about 1 million units more than we currently are running. And the same thing, Larry, the day supply of used vehicles, I think at that time, was considerably higher than it is now in 2019 versus 2025, as the case may be.
Yeah, sure. So to put kind of what you just said into context, auction net sales back in 2019 exceeded 8 million vehicles, or 8 million sales. Auction net sales last year were roughly 6.7 million units. So that gives you some idea as to what we've lost. And again, going back to that late model supply or late model sales, roughly 80% are for 36 months or 3-year lease terms. So 3-year-old inventory or sales this year are down at auction by 11%. Sales of 2-year-old vehicles are up by 24%. You kind of have disparate trends there for those vehicles that are coming out of commercial fleets, meaning rental, and then those that are coming from retail consumers, that is to say, off-lease units.
So we talked a bit about the increase in demand for EVs, but did either of you notice significant change or a notable change during Q3 about consumer demand for hybrids or traditional gas vehicles?
Yeah, I mean, we have had such strong SARs that even ICE is up. ICE vehicle sales were up about 1% or so. Even with that really strong, finish to the quarter, August and September, where we sold a lot of battery electric vehicles, they're only up about 15% year to date. You look at hybrids, though, hybrids are up 33%, and they have been like that every single month of the year. When you look at year-over-year comparisons, you're seeing 30 to 40% increases. And so, in the absence of the tax credits, I think you're going to see maybe even more shoppers looking in that space because you do get a lot of benefits with the hybrid now. Just similar power to an ICE vehicle, but in many cases, double the fuel economy, and the upcharge really isn't that great. I would expect, now, given the changes we've seen with the CARB waiver, the reduction in the NHTSA fines down to zero, that you're going to see a lot of product portfolio shifts from OEMs. And one of the things I'm expecting is a bigger focus on kind of conventional hybrid. You look at the sales numbers, it really paints a picture that this is where the growth is happening. Consumers are very interested in this segment. I'm certainly interested to see how the OEs are going to respond in 26, 27, 28, whether or not they're going to come out with more conventional hybrids. Because I do think that we're not going to see a really strong BEV market for a couple years. We have started to see, I think GM just announced a new lower price in the low 30s for the Equinox. Tesla lowered prices by decontenting some of those I think Model 3 and Model Y that just came out this week. What that's saying is that we're getting closer and closer to price parity on these vehicles, but there's still a gap. Until we kind of see widespread price parity on BEV, I think it is going to remain somewhat niche in the absence of the credits. And hybrids are perfect to kind of fill that gap for those consumers, I would say.
Give the consumers what they want, right?
V8s and hybrids, it's kind of two ends of the spectrum there. That's what we're seeing.
Affordability continues to be the issue for many buyers. I think the number I read is fewer than 25% of the households in America can even afford a new vehicle today. So what are we seeing in terms of pricing trends and monthly payments compared to Q1 and Q2 because of this affordability issue?
So affordability is a challenge on both the new and used side of the market, as everyone would imagine. But that's also what's helping to support used vehicle demand and stronger used vehicle prices, which again is kind of counter to affordability. But still, there's a significant difference between the price of a new vehicle, the average price of a new vehicle, and the average price of a 3-year-old vehicle. So just to throw out some statistics that might be of interest. So if we're talking about physical auction sales, vehicles selling below $10,000 still comprise the majority of physical auction sales, about 40% of sales over the third quarter of this year. That's down a little bit from about 51% back in 2019. However, the share of vehicles selling above $20,000 has grown by 10 percentage points since the third quarter of 2019 to about 30% of total sales. For example, a 2022 Honda Accord, for the model years 2020 through 2025, recorded at auction in the third quarter of this year. But of those, only 22% had prices that averaged $20,000 or less over the quarter, right? So you're really trying to find that sweet spot from a pricing standpoint for used vehicles, which is going to be anywhere from $15,000 to $20,000, right? Of course, it's going to be a little bit below that. Just to give another idea in terms of the strength of used vehicle prices over the past year, wholesale prices have only fallen by about 4% year to date. So that's from January through September. That's an incredibly low rate of depreciation. Pre-COVID, the average annual rate of depreciation was anywhere from 16 to call it 18%. Last year, over the same period of time, used vehicle prices fell by about 7%. The year before that, it was 10%. The year before that, it was 16%. So you go from negative 16 to negative 10 to negative 7 to negative 4. So you see the strength in used vehicle prices year to date. So more consumers, even those folks that would traditionally be new vehicle buyers, are going to and have been turning increasingly to the used vehicle market.
This episode sponsored by AuctionNet. AuctionNet is the industry's ultimate source for wholesale used vehicle data, powered by 265 and AAA member auctions, with more weekly transactions than anyone else. Integrated with top platforms like vAuto, AutoNeek, and Laser Appraiser, AuctionNet delivers fresh, comprehensive pricing data so dealers can buy and sell with confidence. From remarketing and pricing trends to portfolio performance and ROI insights, smarter strategies start with AuctionNet, your competitive edge in used vehicle wholesale intelligence.
So let's look ahead now. Let's look ahead to quarter four. What are the major tailwinds and headwinds that you're both watching that could affect sales volume?
Although, the labor market is very much in limbo right now, you take a look at the stock market, we have had record high performance. So people in the upper ends of the income spectrum are doing pretty well. You know who buys new cars? It's generally more well-to-do people, higher income households. As long as we don't have some big shock to the economy that could impact their spending power, those people are going to continue to plow ahead. Now, we did have a lot of pull ahead volume, so some of those people might be out of the market. I think the overall economic conditions are such that we could sustain probably mid 15 million unit SARs in Q4, and then into next year, mid to high 15 million unit SARs. And that's kind of what we're thinking. We're looking, given the strong performance that we've seen in sales volume so far this year, even a low to mid 15 million unit SAR in Q4 is still going to get us to about 15.9 million units sold for all of 2025. It's more likely that number surprises to the upside by, 100,000, maybe even 200,000 units this year. So we could see, I'm calling it a range, call it 15.9, maybe to 16.1 for new sales this year. And then just because of the pull ahead volume, as I mentioned, there are a few issues out there in the broader economy, the labor market, hiring. We're going to see more impact from tariffs. We are starting to see more announcements in more sectors that are going to be affected by tariffs. I think the economic conditions deteriorate a little bit in 26. And so we're looking at sales maybe to fall into maybe around 15.7 million for 26. So it is not a big fall off, but it is a bit of volume decline from 25 to 26. Again, the broader economic conditions and rising prices from tariffs, like as we mentioned earlier, 5 to 6% is what we've seen so far. And I largely expect that's going to be what we're going to see from all the rest of the OEMs who've yet to announce their 26 MSRPs.
That still is quite a ways from the 17 million that we had for about 5 or 6 years in a row during the 2015 to 2018 or 19. That's a big deal.
We are starting to see, more and more of total new vehicle sales are happening from people with incomes over $150,000 a year. That trend has been happening for the past several years. And so when that happens, you start to see OEMs, start to chase those buyers a little bit more. And offerings at the bottom end of the market are slowly kind of disappearing. There are fewer new cars available below $30,000 each year. And so just as Larry mentioned, when we see prices rising, you see more demand in that used vehicle space. And probably the entry-level new vehicle buyer 5 or 6 years ago is now a late model used vehicle buyer just because of the rise in prices. And there are just fewer options out there for that entry-level customer in the new market.
So, Larry, with the wholesale market pricing, I think you said is only down 4% since the beginning of the year. What's your outlook for used vehicle pricing and availability in Q4 in the months ahead?
Yeah, I think it's going to stay very strong. Just in general, the rate of depreciation is going to be better. It's going to close out the year far better than what it's been historically, certainly better than the last couple of years. The used vehicle consumer is different than the new vehicle buyer, of course. And there are some economic stressors that are out there. I mean, inflation, we know, is unfortunately, it's very persistent. As tariffs continue to be implemented and change, we can expect that to possibly worsen. But that being said, inventory will improve in 2026. I know you asked about Q4, but let's look ahead, right? Because Q4 is typically a soft period of time for both new vehicle sales and particularly used vehicle sales. You get a pop in new vehicle sales historically in December. But for used vehicle performance and activity, it's generally soft in the fourth quarter. So looking ahead to the first quarter, I think that is going to be, it stands to be a very strong quarter for used vehicle buyers and for dealers. Tax refunds are estimated to be very strong next year because many of the things that were passed in the One Big Beautiful Bill earlier this year. We talk about increasing the standard deduction, making permanent the tax cuts that were enacted back in 2017, and increasing the child tax credit. So there are a number of benefits from a tax standpoint that will, I think, help your used vehicle buyer more so than your new vehicle buyer. Going back to the inventory piece of the puzzle, I mentioned before that new vehicle sales in 2022 to 2023 improved substantially. I think retail sales were up by about 8% year over year. So that means that there should be more trade-in volume, certainly more off-lease volume coming back to the market next year. rental activity or new vehicle sales into rental fleets this year are up by 15%. That means that more of those vehicles will be coming back to the used vehicle market or entering the used vehicle market next year. So all of these things combined will slowly help improve the used vehicle inventory outlook, which all else equal will help keep prices from growing. So there are some silver linings. There are some kind of tailwinds that will help support the used vehicle market. Again, especially the fact that the new vehicle market is going to be stressed, if you will, from a pricing standpoint, right? We shouldn't expect new vehicle prices certainly to deteriorate as Patrick has been sharing.
With all the stuff you look at, all the data you look at, were there any data points or trends in Q3 that surprised you?
Frankly, I would have expected a little bit more of a pop for EVs, but we didn't really see that. EV prices and demand have been exceptionally depressed in the used vehicle market. At wholesale, if you look at retained value for a 3-year-old vehicle or what its average price is in the third quarter relative to what its new vehicle price was, you're looking at 37 to 38%. That's substantially worse than the roughly 60% retained value for a 3-year-old gas-powered vehicle. And it's also well behind their hybrid counterparts. Hybrid performance has been exceptionally strong. Now, things aren't going to get any better next year. They're going to be anywhere from 250 to 300,000 additional EVs entering the secondary market next year. So that's only going to apply downward pressure on used EV prices. That can't necessarily or won't necessarily be countered by some sort of tax credit, to help offset or help stimulate additional demand for those used EVs. But it would be a great time for consumers to buy a used EV at a very favorable price point.
What I hear when you say that, Larry, is it sounds like, and we all know we've had this pop in EV leasing since you could do the 45W tax credit within the past couple of years. We're going to start to see more and more of those EVs coming back to the auctions. If you're a dealer out there in a market where BEVs typically do well, do you see some buying opportunities over the next few years for a payment-conscious customer?
Sure, and especially as that relates to certified pre-owned, that's even better because then there's the potential to get a lower interest rate. So, right, you have a lower used vehicle loan rate and prices are already more depressed or lower than they are for a comparable gas-powered vehicle, right? So that monthly payment could look very, very appealing, particularly when you factor in, I'm not paying for gas. Yes, I'm paying to charge the vehicle, obviously, and electricity prices are up, so there's that. But from a maintenance standpoint, tires aside, it could lead to a very compelling purchase option.
So before we go, what is one key takeaway or piece of advice that you'd both offer our members as they gear up for Q4?
I would pay attention to some of these auction trends we're seeing. I just talked about it. If you are in a market where BEVs performed well, you had a strong couple months in August and September, I would really start to look for some of these late model EVs flowing back to the auctions and try and stock up on them. I think there will be enough customers out there who are willing to test out this new powertrain if the payments are right. And I would also just kind of look for payment conscious customers, focus in on some of the inflation reports and just understand what the customer might be going through. Insurance costs are rising, maintenance costs are rising. And if you can just keep those factors in mind, that's going to be something that's going to be on the customer's mind, I'm sure, when they're factoring this into their budget.
And I would say from a used vehicle standpoint and a used vehicle, inventory acquisition standpoint, don't wait until January to start acquiring used vehicle inventory. Again, going back to what I said about tax refunds, if the expectation is that it's going to be a strong Q1, which, historically from a seasonal standpoint, the first quarter of the year is always strong for used vehicle sales. We're expecting it to be potentially stronger than what you would typically see in a normal first quarter, particularly as it relates to the tax refund outlook, as I mentioned. So if you wait until February to start acquiring loads of used vehicles, you probably have waited too long. I think you can be targeted and judicious in terms of what you acquire in the fourth quarter of this year, to acquire vehicles that traditionally don't depreciate, or have a history of depreciating rapidly, right? Also, in terms of the vehicles that dealers are acquiring, consumer demand for cars, believe it or not, used compact cars and used mid-size cars, okay, is very high. whereas the inventory or the availability of those vehicles continues to go down because we've gone from an environment where cars and trucks and SUVs were roughly equivalent, 50% of the new vehicle market. Now it's something like 80%, 20% truck and SUV to car. So it's harder to get a hold of those vehicles, but those are in significant demand by your used vehicle buyer. Try to get your hands on those if you're a dealer more toward November and December, because prices are only going to go up. Wholesale prices are only going to go up for those types of vehicles in a more pronounced way than for used vehicles overall as you get into the first quarter of 2026.
All the vehicles our domestic manufacturers stop making. Okay, there we go.
It's yes.
Well, Patrick and Larry, I want to thank you both so much for your insights today. It's been great having you on the show. Lots of information out there. Really appreciate your efforts.
Thank you.
Thanks for having us.
Thanks for having me.
That's all the time we have for this episode. A huge thank you again to our guests Patrick Manzi and Larry Dixon for joining us. If you're enjoying the show, leave us a rating, a review, and tell a friend. Once again, I'm Michael Hayes.
And I'm Cameron Wilson. This has been Dealer Driven from NADA. Keep your dealership in drive, and we'll see you next time.